If you're sleeping on HYSAs right now, you are leaving free money on the table. Welcome into this video, guys. My name's Joe from Financially Savvy, and in the next few minutes, I'm going to be revealing 4 ways that you can use HYSAs to optimize your finances. I'm also going to be showing you 8 different HYSAs right now at the time of this recording that are yielding between 5 and 8% interest that you can open from your phone. Now, this is applicable for anyone in the UK and the US, but if you are anywhere else in the world, you should still watch this for the 4 ways that you can use these accounts to optimize your finances, and do a quick search for the accounts that you have access to in your location. Let's get into it. First of all, what is a HYSA? A HYSA is a high yield savings account. This is a savings account that typically pays, obviously, due to the name, a higher rate of interest than a traditional bank account, current account, checking account, or any other kind of account. The good news is that your money that's held in these accounts is also insured in the same way that it would be with any other kind of account. You just need to check the terms of the accounts you're opening. Normally, it's insured by the same body that insures your money in any other type of account in the UK or the US. Now, why am I talking to you about this? It's because, in case you hadn't noticed and have been living in a hole, inflation is very high. And therefore, any cash that you've got just sat around in your accounts right now is being eaten alive by inflation. So if you have cash saved for anything right now, or you're planning to save cash for anything right now, it is a great time to be taking advantage of these types of accounts. In fact, here are the 4 ways that I'm using high yield savings accounts to optimize my own finances. Number 1, my emergency fund. Now, for anyone who doesn't already know, I went from working a 9 to 5 and having a decent side hustle to my side hustle replacing my 9 to 5 and me now being retired from corporate life. Now, in the process of leaving my 9 to 5 and going completely self-employed and scaling my own business, I wanted to grow my emergency fund from the 3-month emergency fund that I had up to a 6-month emergency fund. And I'm using a high yield savings account to do so. In fact, I'm using a few high yield savings accounts to do so. A few that yield between 4 to 6% that are limited access or limited contribution accounts, as well as accounts that have a fixed rate for a fixed period of time. I'm juggling money between each of these accounts to make sure I get the most money out of them, but you don't have to do it in that much of a complicated way. Just open up an account that I'll show you in a bit, put your money in there and let it grow. Anything is better than the 0.0 NAFL that you're probably getting right now if it's not in a high yield savings account. Using a high yield savings account for your emergency fund helps you protect your cash from inflation and ultimately means fewer contributions from you to keep it topped up in the future. Number 2 is paying off 0% or low interest debts. Essentially, saving your overpayments in a high yield savings account that is paying a higher rate of interest than you are currently being charged by your debt makes sense, because you will accumulate interest over the period of your repayment term and then use the amount you've saved plus the interest you've earned to pay off the debt. Of course, though, make sure you're continuing to make at least the minimum payment on those debts, but any overpayments that you would be making can be put into a HYSA or a high yield savings account so that you can ultimately pay the bank back with some of the bank's own money, plus your money as well, obviously. Number 3 is overpaying your mortgage. Now, this is similar to the example from before, so I won't spend a huge amount of time on this, but ultimately, if you are making overpayments on your mortgage, or you plan to make overpayments on your mortgage, then it could make sense to put those overpayments monthly into a HYSA instead of just making monthly overpayments on your mortgage. For example, if your mortgage rate, if you're lucky enough to have a mortgage rate that is fixed at, say, around 2.5% pre, obviously, recent times, and you could put money into an account that is yielding 8%, 7%, 6% even, more than the 2.5% is key here, then obviously it makes sense to put those overpayments into a HYSA that is yielding more than the amount of interest that you're being charged on your mortgage. Of course, in that time, you will continue to make your minimum monthly payments, and then at the end of the interest yielding period, or when your account crystallizes, or whatever you guys call it, then you collect your interest on your HYSA and you will overpay in one lump sum onto your mortgage, making sure you check for any overpayment fees or anything like that. You may wish to spread it out depending on how much you've saved. And number 4 is a sinking fund. For anyone who isn't aware, a sinking fund is an account that is used to save money over the period of an entire year to pay for an expense that is paid for once per year, such as your golf membership or your car insurance, for instance. Rather than letting the cash just sit there in an account doing nothing, it makes sense to put this in a high yield savings account so it earns you interest, obviously. Now, there's clearly tons of ways to put these accounts to good use. My message ultimately is just make sure you're taking advantage. As promised, I am going to jump into my screen share and show you a selection of accounts right now. At the time of recording, this is accurate. A list of accounts that are yielding between 5 and 8% yearly interest. Let's get into it. Okay, so right here are the best UK examples for fixed term accounts in the UK right now. So you can see you've got Monument Bank, National Bank of Egypt via the Raisin app, Union Bank of India UK, and Union Bank of India UK again. Now I've put 2 6-month fixed accounts here, a 1-year account and a 2-year account, and you can see that essentially the kind of key thing I want to show you here is that the 1-year account actually has a only very slightly higher interest rate than the 2-year account. Now this is an indication that banks are ultimately expecting the Bank of England base rate to drop over the long term, and therefore they are not rewarding savers for holding money with them for a longer period of time because they are expecting interest rates to come down and not go up, which is good for non-savers, mortgage holders, etc. Not so good for savers, but ultimately it means there's not much point in fixing your money for 2 years if you don't have to, because you can get a better rate by fixing for 1 year. So you can see that these accounts are yielding anywhere between 5.5% up to 6%. Next up, we have the best limited and instant access accounts in the UK again, and then I'll get into the US examples. So right here we have the best interest rate you can get in the UK right now, with Nationwide paying an 8% interest rate. Now this is both a limited contribution and also a limited access account, in that you can take a maximum of 4 withdrawals per year before your interest rate then drops to 2.15%, and you're also maxed out at being able to contribute £200 per month to this type of account. Next, you've got Santander Edge and First Direct, who are all instant access accounts. You have to pay in a minimum amount per month, and you can only pay in a maximum amount per month, but you are earning 7% interest. It is instant access, and you are not penalized for withdrawing your money. And last on here is the Club Lloyd's Monthly Saver, paying 6.25%. Next up are the US examples. So first off are money market accounts. So a money market account is generally an account that will pay a higher rate of interest, as the banks that run them are permitted to invest those deposits in things that savings accounts are not permitted to invest your money in. So therefore you get that. And obviously fixed term, which I'll show you on the next screen, means your interest rate is fixed and you can't access it for a given period, as mentioned. So money market accounts, we've got Quantic and First Internet Bank, both paying between 5 and 5.5%. Quantic doesn't have a fee. First Internet Bank does have a $5 a month fee, and your minimum deposit is $100. And next up we have the savings and CDs accounts. So the top 3 are Everbank, Basque Bank and BMO Alto. These are all savings accounts paying basically the same rate of interest, 5%, pretty much zero minimum deposit apart from Everbank, which is $1. And then you have the CD accounts. So you've got Popular Direct and BMO Alto again paying around 5.5%. Both of those are fixed for a year. Minimum deposit in the Popular Direct CD is $10K. So just something to bear in mind there. Now I showed you a bunch of ways that you can use these accounts earlier on in the video, but the most important application for a high yield savings account by far is your emergency fund. If you don't already have an emergency fund, then now is a great time to start saving one, thanks to these interest rates, which we haven't seen honestly for the best part of around 2 decades. So, you know, there's an entire generation of people who are just used to interest rates that are like 0.02%, which was the average as far as I was aware before recent times. Now we're getting rates up from, you know, 5 to 8% if you're in the UK. So it's a great time to take advantage, guys, so make sure you do. If you found this video helpful, please make sure you smash the thumbs up button right now. It would really help me out and also help the video out. This is a brand new channel, so I really appreciate anything you guys can do to help me continue to make great helpful videos for you guys to take control of your finances and give you great tips to help you do so. Please make sure you share with your friends, your family, your partner, anyone else who needs this information. And also comment below with any questions you have on anything I've covered today. I'd be more than happy to help. And the last thing from me is obviously don't forget to subscribe so I can teach you how to build your own perpetual money making machine so that you can escape your 9-to-5 and retire early, or at least have a backup plan so that you are able to do so when you want to do what you want with your time, just as I have done. Until the next one, guys, take care.